Hi, my name's John Ciganek. I'm Managing Director and CEO of Vanadium Resources. I'll present our corporate presentation. I'll just load it up now. In terms of a general overview, we've got one of the world's largest and highest grade vanadium deposits. Um, we completed a DFS in last year in October. Our MPV on the project on a 100% basis was 1.2 billion. Our 74% share at the time was 0.9 billion. We recently announced earlier today that we increased our ownership up to 86%, so a very significant increase in attributable MPV as of early today, and also a very high IRR of 42%. Our ore body is easy to mine, low strip ratio, and as a result, low operating costs. We're using traditional processing methods that's been used for decades within the Bushveld region, and we'll be producing about 10 to 11,000 tonnes per annum of V2O5 vanadium flow. We've got an established mining license. It was granted last year. Our deposit is located within an established major mining and smelting jurisdiction, it being Bushveld. And we've got an experienced management team with a chairman who has developed projects within the region, and also a general manager who's operated vanadium operations and planning for the last 20 or so years. This is a very high level overview of the corporate snapshot. Our market cap's trading at about $30 million Aussie. We've got about $6 million in cash. Our largest shareholder, Matrix Resources, which is a nickel producer in Indonesia. It's a Chinese company. They invested 10% of the company for $6 million with a 40% premium to the share price at the time, and also an MOU to enter in marketing and offtake agreement for 40% of our stage one of our project. Our second largest shareholder, Dan Toon, is our chairman, Yuri Vessels. And Rabex is one of South Africa's largest mining and civil contracting companies. Why vanadium? Vanadium basically has two sort of areas that are the focus for the moment. At the moment, our DFS is primarily focused on steel and alloy. Basically, just a very small percentage of vanadium within steel makes it significantly stronger, more robust, more flexible, and significantly lighter. On the other side, there's also vanadium redox flow battery. That's a growing area of demand for vanadium. But from our DFS and our primary focus for the project is mainly around the steel and alloys. And we're looking to secure offtake with steel and alloy companies, steel mills in particular. The rationale for that is that that's a lot easier to get debt funding off the back of that. There is significant demand for vanadium in vanadium redox flow batteries, but it's still in the formative phases in terms of growth. And a couple of the key points in terms of vanadium redox flow batteries compared to other types of batteries of this type. The life of a typical battery can be well over 20 years. It doesn't, it's non-flammable. It doesn't burn like some of the other major scale batteries. And at the end of 25 years, you can recycle the electrolyte, vanadium electrolyte that's used within the battery. So a good example is in the bottom left-hand corner, the Dalian flow battery. That was built this time last year, 100 megawatt facility. That's been in operation for 12 months, and it's also developing a stage 2 plant at the moment. That's in progress at the moment, and they're looking to expand to double the capacity to 200 megawatt capacity. Major sources of vanadium comes from co-production, which is a secondary production from steel manufacturing, primary production is basically like our project, where we produce vanadium from primary ore material, and there's also secondary production of vanadium coming from, coal slags, bauxite slags, and other types of production. And the majority of the production feeds into the steel sector, and you can see the grey bar on the graph here. That's the majority of production goes into the steel sector. You can see the blue, which is the vanadium redox flow battery area. This is a significant area of growth, coming into the future. And as I indicated earlier, the primary focus for this project is around selling vanadium to the steel sector, but there's a significant upside in terms of the VRFBs as well. On the VRFB installations worldwide, there's about 280 facilities in production or in construction. And you can see there's a strong concentration of facilities within China and in Europe, and there's an increasing number in North America and in Australia. A lot of the facilities are about 5 megawatts to 50 and 70 megawatts. And as I indicated earlier, some of the larger ones in China are 100 to 200. There are several that are being built that are significantly larger than 200, and those will become more prominent in the next few years. Once that happens, there will be a significant shift away from your traditional lithium hydroxide batteries, and this will have the potential to attach a vanadium redox flow battery to a solar farm or a wind farm, and be able to ultimately displace coal-fired power stations and gas-fired power stations. And this is one of the reasons why I joined the company off the back of that. Some more on the metrics. I indicated earlier, our attributable share is well over $1 billion now, with 86% in our attributable share of the NPV. Yearly free cash flows is about US $152 million, 42% IRR, 27 months payback. Our startup capex is about 211, and our operating costs is about $3.24, and that places us into the first quartile of the cost curve. When we did this study late last year, the vanadium price was about $9.50. At the moment, it's trading between $6 and $7 a pound. This slide highlights the location of the project. You can see the inset of the diagram. South Africa, our project is in the northern part of South Africa, in the Limpopo area. These blue zones, the eastern and western limb, this is the Bushveld region. As I indicated earlier, there's about 30 to 35 major mining and smelting operations, such as Glencore, Samancor, Anglo American, ARM, and Implats in platinum, ferrochrome, PGEs. And as a result, there's significant amount of infrastructure, significant access to engineers. The project is not like a lot of projects that are like this, remote locations. So we don't have to build, we don't have to drill for water. We've got power readily accessible. We've got network power in the immediate vicinity. And the other highlight in this area is that we're located on the eastern side of the Bushveld area. Vantek and McPox are two historical mining operations that were running for decades, and they're basically, Vantek was probably about 5 to 10 minutes drive from our location, and McPox is about 15 minutes drive. And the mineralogy is very similar, and our general manager has over that period when those projects were in operation, received ore from those. He ran operations on the western limb, and you can see Brits Vanadium and the other two areas. They're part of the Bushveld Minerals operations, and they used to get ore from Vantek and McPox. And Rovan on the western side, you can see there, Rovan, that's a Glencore operation. This diagram highlights our main project. So on the left-hand side, you can see the red box, the mining area. That's the zone of our DFS. Our mine life within that is about 25 years, and that basically represents our, circa $1 billion NPV. The blue perimeter around that red box is basically the extent of our mining and exploration license, and our resource within that area is about 680 million tonnes. And based on our stage 1 and stage 2 project, that gives us a mine life of about well over 180 years. Um, on the right hand side of the diagram, Tweedfontein Salt Roast Leach Site, the acronym SRL is the Salt Roast Leach operations. That's our downstream processing facility. We're planning to concentrate on the left-hand side of the project near the mining operation, and we'll be hauling concentrate ore across to the downstream processing facility, which will produce our downstream project, which is the vanadium pentoxide flake. We're currently proposing to haul it by road. We're also in the process of doing a feasibility for installing an overland rope conveyor. So basically, the type of rope conveyor that we're proposing here is similar to a ski lift. Where you sit in the ski lift chair. Instead, there's a hopper that will take the concentrate over the terrain and across the valley. A good example of one of those facilities is Glencore, their line ferrochrome smelter, just immediately north of us. They're installing a 30-kilometre rope conveyor using the same engineers that we're proposing, and that facility is basically driving past our downstream processing facility. The other thing to highlight in here, as I mentioned earlier, we've got access to water and power. In addition to the existing power from Eskom, we're also building a 6-megawatt solar facility on our mining site within the red box, and to basically power the mine site and the concentrator. Out on the downstream processing side, we'll be building that facility will require about a 15-megawatt facility, and our adjacent owner of the project, of the land that we purchased the land from, they'll be building a 35-megawatt solar facility on that site, basically earmarked for our project. So we basically have Eskom, the primary network generator, and we're providing power as our base case, but we're also providing alternative power from solar as well. And finally, on the mine and concentrator side on the left-hand side, we'll be also installing a 1-megawatt vanadium redox flow battery. It is small, but the objective there is to build a small-scale facility, and once we've demonstrated that for about 12 months, then we'll look to build a battery basically to match the scale of the concentrator, and we'll be doing the similar thing on the salt roast leach side as well. On the ore resources and reserves, we have, as I mentioned earlier, we've got a 680 million tonnes resource at a 0.7% V2O5 in situ grade. The reserve sits at about 77 million tonnes at 0.7% in situ grade. And you can see on the right-hand side the mineralisation, basically all outcrops. So the strip ratio is very low at 0.9 waste to 1 ore. As a result of that, we've got very low mining operating costs, and therefore, very low on the cost curve as a result. The other attribute of the project, its amenability to produce a high concentrate grade project. So a 2% V2O5 grade within the concentrate that will be transporting across to the downstream salt roast leach facility. Now, the positive aspect of that is because the grade is so high, we're not processing as much vanadium concentrate to get the vanadium flake, and as a result, our operating costs are also low there as well. This slide highlights the extent of the mine plan and the perimeter of the first 25 years. And you can see the black perimeter. We've basically got 3 hit zones, and that basically represents the first 25 years of our deposit. On the right-hand side, the green perimeter represents the 67-year perimeter of our project. And the remaining red, orange and green is basically unmeasured, indicated in inferred zones, and the blue zone is the unclassified ore, which means we haven't done enough drilling in those areas. So I think once we've done additional drilling to fill out those areas, we'll have access to significantly higher than 180-year mine life. The concentrator, this will be located immediately adjacent to our mine site, and it's very similar to a basic iron ore beneficiation plant. So it's basically crush, grind, and using wet magnetic separators to separate the waste from the ore. And the characteristic for this project is that the iron and the vanadium is associated with each other, so it's very amenable to magnetic separation. As a result, we're able to get a high vanadium concentrate grade of 2% and above. Similarly, on the downstream processing site, this is a processing flow sheet that's been used for decades, as I mentioned earlier. So from a banking perspective, we're not going to have a problem there convincing banks that this is doable. So basically, it's combining sodium sulfate into the mix of the concentrate, putting it through a roast kiln, and then leaching it and then crystallizing, produce a vanadium pentoxide flake. And the grade of that will be plus 98% grade. It will be also able to produce 99.4% grade for specialty products as well, which will also be able to be sold into vanadium redox flow batteries as well. On offtake, strategic investment and financing, earlier this year we announced the transaction with Matrix Resources, which was a Chinese trading and nickel producer. They have a nickel operation in Indonesia, and one of their strategic imperatives is to move into metals for battery. And so their rationale for investing into this project is off the back of getting exposure to vanadium. So their 40% premium investment, brought to us $6 million Australian into the company. Or in conjunction with that, we entered into an MOU with them for 50% for 20% offtake and 20% marketing. We're still in negotiations with them around those marketing and offtake arrangements. We were in China about a month ago. They reaffirmed their interest in vanadium and also entering into a formal agreement with respect to offtake and marketing. In parallel, we've been having ongoing discussions with groups in North America, Asia, and also Europe with respect to similar types of transactions, including strategic investment and offtake and or marketing arrangements. In parallel, we've been having discussions with a range of debt financiers to the point where we have received about 8 indicative term sheets to provide funding for up to 60 to 65% of the project. Those facilities will require some sort of offtake arrangements or marketing arrangements. So those 2 work streams have been going in parallel and are dependent on each other. We do have a range of types of debt financing options, ranging from traditional project financiers through to PE funds that can sole fund the entire debt funding requirement, through to Nordic bonds as well. We will lock in the preferred route once we've locked in the offtake and marketing arrangements. Some of the growth catalysts for increasing shareholder value is really around securing the offtake. Once we've secured that, then we'll be in a good place to progress our financing process, we'll be looking to raise about 60% of the total funding requirement from debt. The remaining will come from our strategic investors, off-takers, and also equity capital markets. Point there with the equity, Matrix, for example, they've committed to invest to retain their 10%, and also into construction retain their 10%. They've also expressed interest to invest more than 10% into the company, and also potentially into the project. So there are avenues for companies like Matrix to contribute to the construction funding as well. The project will be built in two phases. So phase one will be to build a facility that can produce about 10 to 11,000 tonnes per annum of V2O5 flake. In terms of a run-of-mine operation, that'll be a small mining operation at 1.6 million tonnes per annum, and that'll produce concentrate, about 725,000 tonnes of concentrate at 2% V2O5 per annum. And the capex for stage one will be about 211. After 4 years of production, we'll be then moving into phase two, which will be basically a carbon copy of that first stage. We will have a footprint immediately adjacent to our concentrator and our salt roast leach sites, and we'll be basically duplicating those facilities across that. For the stage one phase, we will be including the debt financing, but for stage two, our metrics can show that project for stage two will be self-funded at that point. In terms of some of the areas for optimizing, we are looking at the rope conveyor, as I mentioned earlier. That will significantly reduce our operating costs for haulage. It'll reduce our haulage costs by about 40% by installing the rope conveyor. We'll be also doing some further delineation of our resource. For example, removing the unclassified ore and transferring the unclassified ore to resource status inferred, and that'll look to increase the resource. We'll be also looking to do further optimizations around the deposit in particular, because we're only mining 25 years of the 180 years. We're also exploring avenues to enter into potential JVs or potential other feasibility studies for the remaining part of our deposits with other parties potentially. Some groups have expressed interest to acquire our concentrate. Some have looked at exploring acquiring ferrovanadium and a range of other potential avenues. So we've got a lot of upside optionality, of course, of our mine life. We could also simply just continue to increase the scale of our operation. Stage one, stage two would go to stage three and just focus on vanadium pentoxide. The alternative is, once we've built stage one, we could also produce bigger plant that can produce a range of other metals. For example, we're only producing vanadium pentoxide flake. In the bushveld, our peers currently produce ferrovanadium, titanium dioxide, ilmenite, nitrovan, and a suite of other metals. That's typically coming out of deposits like this. So we can explore that. We will be doing those studies during the next 12 months. And we'll be looking to determine whether we simply continue to get bigger, just producing vanadium pentoxide flake, or produce a range of other metals. And the last area, particularly if there is a substantial uptick in demand, and we can see that through commodity analysts' forecasts coming down for the vanadium peroxide batteries, we'll be looking to explore potential to enter into joint ventures with other power generators. For example, the solar company that's looking to build a solar facility adjacent to a salt roast leach plant, we could potentially do a JV with them and other solar companies and wind companies in South Africa and abroad as well. So potentially we could end up having a vanadium pentoxide operation, also producing a range of other metals and then potentially producing vanadium electrolyte, which will go into batteries, and potentially JVs with battery manufacturers and energy providers. And so that brings me to uh, probably my last slide, the investment highlights. So in summary, we have a very large project, NPV of, in terms of Aussie dollar terms, well over $1.4 billion. CapEx, we've been able to keep that low, US 211, to produce a vanadium pentoxide flake operation, will be lowest in the cost curve. We've got a very long life. Our DFS was based on 25 years, and outside of that, our life based on the resources is up to about 180 years above. We're an established mining jurisdiction with significant infrastructure nearby. We've appointed debt advisors and positive engagements with debt and our banks and other financial institutions. We're in the process of having discussions with off-takers around off-take and marketing arrangements, and also strategic investments with those. We're building a strong development team and an execution team, and we've got significant upside on top of our existing project that we've announced in the DFS, and we'll be looking to explore upside value associated with that, and looking to secure debt financing and offtake in the next few months with a view to securing first production during 2026 and starting construction at the end of next year. Thank you very much.